Welcome to Simplified Profits. With over 23 years of experience in the stock market, I'm Anthony Calhoun. Just make sure you subscribe, turn on your notifications, and leave some feedback. Today, we're going to go over our transparent account real quick as we locked into positions for profit. And we actually now freed up some cash flow, and we're waiting for this continuous pullback. Hopefully, we see more of it. So, just real quick, we'll touch on today what happened in the market. So some data came out making people think the rates are going to stay higher for longer, which is almost what the Fed has been saying anyway, but people have been anticipating a soft landing. Probably not the case, but we'll see. Still, time will tell, and we'll continue to trade the stock charts. SMH pulled back today 1.85%. It was, I want to say, as low as 2.5%, somewhere right around there. Triple Qs pulled back 1.5%. SPY pulled back 1.38%. There's the Qs, which it's touching the 20-day moving average. That could be some support for it, but I feel like this market needs a pretty good pullback. So only time will tell. Same with SPY. Seemed to have bounced off the 20-day moving average. No matter what, we're going to wait for an oversold pullback, kind of what we do. Lately, we've been kind of breaking rules in the transparent account, and we'll get to that here in a second. I'll show you. Um, and the Dow Jones pulled back 1.36%, and it's hovering right above the 20-day moving average, which is the middle line in the Bollinger Bands, ladies and gentlemen. So could the pullback be over with, or could there be more to come? I think we'll see some more to come. I could be wrong about that, but we're a little overdue for a good oversold pullback. And that's what we'll be waiting for. But right now, we do have positions in DIV, which is oversold. I think I added like 3 shares today just to round it up to 40 from the 37. Not really down too much in that position, but it's oversold. It'll bounce back. And if not, we'll continue adding to it. Now, it does break the rule of the 200-day moving average, but this is just a dividend income type position that's going to pay us monthly. And we're just kind of doing this on the educational account, just to kind of see where this position will end up if we continue to add every time it's oversold, and how much it will outperform, let's say, the stock itself. So what this stock does for 2024, we're going to see how much we're up in it for 2024 only by adding on the pullbacks and reinvesting the dividends. IBM, we bought this. I think we're down 1% or so on this. I think it's a great company. We'll probably continue to hold on it. We've been up on it and could have locked in profits, but this may be one I want to hold for the kind of the longer term. I feel like we got in it at a good price. The PE still pays a good dividend. It's one of those companies that'll always be around. As you can see, if you look back, it's been kind of struggling to break the 200-day moving average and out from this position right here. The more I look at the kind of the long-term chart, unless something changes on the chart, we'll be in it. But I think IBM might get a breakout from this long-term sideways trend it's been in. So we'll find out. Still hasn't technically hit oversold, but we'll add to it and manage that position as we need to. And when we talk about managing positions, so CVX actually had some people. I don't even want to really get into it, but if you check it out on StockTwits, this guy blocked me. I was going to screenshot some of his posts because basically, I entered CVX puts, which we just locked in profit on today, and based on which I do want to say I don't recommend trading options at all. Don't recommend short anything at all. But the market kind of got boring for me. And I think it's really just because I'm trying to put some content out there for you guys, just kind of teach you how to manage positions, which I think I'm about to really stop. You'll probably see a lot less videos because I'm going to focus mainly on the rules of simplified profits, what I put in the book. If you ain't read it yet, pick it up. But this is going to pull back. So we bought some puts that were really only a couple weeks out, which I didn't want to do that. But we had a bearish engulf here. I should have really watched the hourly chart. That's kind of where I went wrong. I thought the hourly chart was going to continue breaking down and it might fill that gap kind of quickly. It didn't. The hourly chart bounced a little bit, kind of faded at the 20 moving average on the hourly chart and came back down. And what I did was I managed that position. That's why the guy in StockTwits, as soon as it went up the next day, basically, kind of went off his hinge and blocked me. But needless to say, if you look at this guy, you'll see what I'm talking about. Don't really care. You obviously don't know nothing about trading or managing a position. Okay, I don't want to take any losses, and we'll see that here in a second. So I'm going to manage that position. That's why I don't go all the way in on something thinking I picked the bottom or top and thinking it's going to go up or down and I'm going to be in profit right away. No, I keep cash and I'm ready to manage my position. So let's go into our transactions, but real quick, we also locked in Verizon. We locked in Verizon like first thing in the morning when it was up like 1%. I still like the chart. I think we'll still see it bounce up to another 8%. I think we'll have an 8% run. Almost added it into. Actually, might add it tomorrow, depending on what the market looks like, into my long-term income account. I got like 4 accounts. I've been letting some of them kind of just slide and sit there while I've focused on kind of the transparent account, trying to manage some positions and put some stuff out there to kind of help my son and other people learn. But NRG, I've actually been waiting for this chart to pull back for a minute. It did right there, but it didn't touch the bottom Bollinger Band. It didn't pull back much, even though it was definitely under where I bought today by 1.5%. But we bought today being oversold. I mean, it's just a utility company. Pays a decent dividend. PE's decent. I haven't really dug too far into the fundamentals, but I do like the chart. I do like how it's trending up over the 200-day. It looks bullish and it's pulled back. So I added a chunk of that to one of my other accounts, basically my income long-term account, and Verizon, which we locked in profit on the transparent account. I might go ahead and add that to that as well. Not sure yet. Definitely like the stock chart. It does pay more dividend than NRG. And it's definitely oversold. So may add some of that tomorrow. We'll see. All right. Regardless, bear with me. Let me swap over to the transactions. All right. So these are our transactions. As you can see, they are. I mean, we're still up 7% for the year. That's really in January. So we've been kind of anticipating and waiting for a pullback. We've been kind of grinding here and there. I think we'll finally see that pullback. And we'd be up a lot more if I didn't jump out of these positions like Quad X and SOXL. We'd probably be up 30-40% already in January. And that's the kind of strategy I'm going to stick to moving forward. I've been doing way more trading than I normally do just for educational purposes because this is more of an educational account. So I'm doing this to show people how quickly you can actually grow a portfolio by putting 20% of your income or even 10% of your income to work every pay period, starting off with a small amount. We started this account with $2,000 and we've been adding 20% of our portfolio or 20% of our income and trying to compound 7-8% a month. So it's really mid-February. We need to kind of, hope to get some swing trades in February. If not, we may have 30-40% in March. Only time will tell. But this is our CVX. So initially, let's see here, on the 9th, okay, this was Friday, we picked up 2 puts. Okay, Monday, which was yesterday, the stock went up, puts went down, okay. I could have easily just said I'm not willing to risk any more money and locked in 20% loss, okay? But instead, I averaged my cost average. I lowered my cost average. I bought a put at 180. I bought one at 160. And then today I locked in profit, okay? I want to say, I sold them all at 210.48. And we made a total of $53. Okay, so we spent $788, locked in $841. Now I was down. That's why I say don't trade options because it can get very emotional if you're emotional with your money because it moves a lot and time is not on your side. You will burn through money I think it actually closed way lower than this, and CVX closed lower. So take a look at the February 23rd 150 put with CVX. I guarantee it closed lower than this. And when I sold CVX, it was higher than what it closed. But time will decay options. Okay, so I'm not a fan of trading options. I like to have time on my side. Now I will trade options. I don't think I'm ever going to do it in this account again. Uh, just because I don't want other people jumping into options without learning how to basically kill the market every year, not needing to trade options. Okay, so that's where we at, or as far as transactions go. You can see the only one we took a loss on was GD, and that was and that didn't even count the actual dividend it paid me. Maybe it did. I'm not sure, but we did get a dividend on that. We actually, if we would have held it, we would have made 5-10% on that. Have to look again, but basically, I was expecting the run up it got on earnings to happen prior to earnings, especially with the ex dividend date. It didn't. So, as much as I hate locking in losses, we went ahead and did it. Probably should have held through earnings, and that'd be another green number on the account. And let's jump into the positions we have currently. So this is where we're sitting currently. Account value is 4506.70. That's just with today. So these positions we were up as of yesterday. Today, obviously, if you've seen the market, it took a pretty big dive. I wasn't really wanting to add to any of them. Right now, we're sitting on available to withdraw. It's just because what we locked in today hasn't cleared yet. But right now, we got 29.35 that'll be ready to put to work as soon as we get the really until I get the text message notification. That's how I usually trade. I have alerts set up. I really don't even watch the market that much unless I get bored. So I'm going to stick to that. That way I'm not over trading. Over trading will kill your account. I've kind of been doing it, even though I've been locking in profits, but it's almost just not worth it in the end. So I'm going to stick to the book, simplify profits, and we're going to grind this year out and destroy it. But IBM right now, you see 20% of our portfolio, and overall, by the end of the year, that's all our long positions will be, is about 20% of our portfolio. So as we add profit and add income, I will let these kind of ride and probably add to them. Right now, they're 35% of our portfolio, and I've kind of dropped it down. I've only made one buy on IBM, made multiple buys on DIV, and right now, down 1.3% on DIV. Actually should have dividends dropping tomorrow, and that would actually drop that by about 0.5%. IBM down 1% on that. Not really too worried about either of these. All right, these are things I will hold for the long term. This just for income, and this for income, and I think it's a good company, unless it crosses under the 200-day moving average or something like that, which this I really don't care about because it's strictly for monthly payouts. That is where we're sitting, ladies and gentlemen. So still looking to hit 7% minimum this month. If not, we need to double, triple it next month. And I'm out. Make sure you subscribe to follow.